Here's a summary of Apple's Q2 fiscal year 2025 earnings call, focusing on key financial metrics, management's outlook, risks, highlights, and important statements from the CEO and CFO. Overall financial performance. Apple reported $95.4 billion in revenue for the March quarter, a 5% increase year-over-year, meeting the high end of their guidance. Diluted earnings per share, EPS, reached $1.65, an 8% increase year-over-year, setting a new record for the March quarter. The company generated strong operating cash flow of $24 billion. Key financial metrics. Revenue, $95.4 billion, plus 5% year-over-year. Diluted EPS, $1.65, plus 8% year-over-year. Total gross margin, 47.1%, up 20 basis points sequentially. Products revenue, $68.7 billion, plus 3% year-over-year. Services revenue, $26.6 billion, plus 12% year-over-year, an all-time record. Products gross margin, 35.9%, down 340 basis points sequentially. Services gross margin, 75.7%, up 70 basis points sequentially. Operating expenses, $15.3 billion, up 6% year-over-year. Net income, $24.8 billion. Revenue breakdown by product category. iPhone, $46.8 billion, plus 2% year-over-year. Mac, $7.5 billion, plus 7% year-over-year. iPad, $6.4 billion, plus 15% year-over-year. Wearables, home and accessories, $7.5 billion, minus 5% year-over-year. Key highlights. Services achieved record revenue. The services segment delivered an all-time revenue record of $26.6 billion, driven by strong performance across all categories, including double-digit growth in paid subscriptions and active Apple Pay users. Installed base reaches all-time high. Apple's installed base of active devices reached an all-time high across all product categories and geographic segments, indicating strong customer loyalty and continued product adoption. Geographic growth. Apple set quarterly revenue records in numerous countries and regions, including the UK, Spain, India, and the Philippines. U.S. investment. Apple announced plans to spend $500 billion over the next 4 years in the United States, expanding facilities and opening a new advanced server manufacturing factory in Texas. Apple Intelligence expansion. Apple Intelligence features have been rolled out to more languages and regions, with early data suggesting stronger iPhone performance in markets where it's available. Product innovation. The quarter saw the introduction of the iPhone 16e, M4-powered MacBook Air, and the new Mac Studio, highlighting ongoing product development. Sustainability progress. Apple announced a 60% reduction in emissions from 2015 levels and continues to increase its use of clean energy and recycled materials. Key lowlights/challenges. Wearables, home and accessories decline. This segment saw a 5% year-over-year decrease, attributed to difficult comparisons with prior year product launches like Apple Vision Pro and Watch Ultra 2. Tariff impact. Tariffs are an ongoing concern, with an estimated $900 million impact on costs for the June quarter, assuming current rates remain unchanged. The company is actively optimizing its supply chain and exploring alternative sourcing to mitigate these impacts. Siri feature delays. While many Apple Intelligence features have launched, the company acknowledged needing more time to perfect more personalized Siri features to meet their quality standards. Geopolitical tensions in China. While China showed sequential improvement after a prior quarter decline, ongoing geopolitical tensions remain a factor. Legal proceedings. Apple is closely monitoring ongoing legal cases, such as the Epic Games injunction and the DOJ case with Google, which could potentially impact the services business, although the company expressed confidence in its ability to mitigate these. Management's forecasts and outlook. June quarter revenue. Apple expects total company revenue to grow low to mid-single digits year-over-year. June quarter gross margin. Guidance is between 45.5% and 46.5%, which includes the estimated tariff-related costs. June quarter operating expenses. Expected to be between $15.3 billion and $15.5 billion. Future outlook. Management expressed continued confidence in their ability to innovate and grow the business long-term, despite the uncertain global macroeconomic environment and potential tariff impacts. They are not providing specific category-level guidance for services growth in the back half of the year due to current uncertainties. Significant risk factors. Tariffs and trade policies. The potential impact of ongoing and future tariffs on costs and business operations is a significant risk. Macroeconomic conditions. A worsening global economic outlook could negatively affect consumer spending and demand. Geopolitical tensions. International relations can impact supply chain operations and market access. Legal and regulatory challenges. Ongoing legal cases and regulatory scrutiny could affect business practices and profitability. Competition. The technology landscape is highly competitive, requiring continuous innovation. Most important statements from CEO Tim Cook. We are as dedicated as ever to the innovation and ingenuity that will enrich our customers' lives and help us leave the world better than we found it. On U.S. investment. We're going to be expanding our teams in our facilities in several states, and we're going to be opening a new factory for advanced server manufacturing in Texas. On Apple Intelligence. AI and machine learning are core to so many profound features we've rolled out over the years. We've built our own highly capable foundation models, and we went to great lengths to build a system that protects user privacy. Regarding Siri delays. We need more time to complete our work on these features so they meet our high-quality bar. On tariffs. For the June quarter, currently, we are not able to precisely estimate the impact of tariffs as we are uncertain of potential future actions prior to the end of the quarter. On supply chain resiliency. Some time ago, we recognized that relying on a single location posed significant risks. Over time, we've opened up new sources of supply for certain parts of the supply chain. Most important statements from CFO Kevin Parekh. Our March quarter revenue of $95.4 billion was up 5% year-over-year despite a headwind of almost 2.5 percentage points from foreign exchange. Services revenue was $26.6 billion, up 12% year-over-year despite over 2 percentage points of foreign exchange headwinds. And as Tim mentioned, this was an all-time revenue record. Company gross margin was 47.1%, in the middle of our guidance range and up 20 basis points sequentially, primarily driven by favorable mix. On capital return. Given the continued confidence we have in our business now and into the future today, our board authorized an additional $100 billion for share repurchases as we maintain our goal of getting to net cash neutral. We're also raising our dividend by 4%. On June quarter outlook. We expect our June quarter total company revenue to grow low to mid-single digits year-over-year. On product gross margins. On the sequential, as we mentioned in the prepared remarks, we had a decrease in the product gross margin by 340 basis points sequentially. That was primarily driven by mix, seasonal loss of leverage, foreign exchange. In summary, Apple delivered a solid March quarter with overall revenue and EPS growth, driven by a record services performance and strong product sales, particularly in Mac and iPad. The company is actively managing the impacts of tariffs and continues to invest heavily in innovation, including the expansion of Apple Intelligence and significant capital expenditures in the U.S. While facing some headwinds in wearables and delays in certain Siri features, Apple maintains a positive outlook for the June quarter and beyond, underpinned by its robust installed base and commitment to long-term growth.